Let's bring on board Mr. Srinivasaraghavan. He's the MD at Sundaram Finance. He joins us on the show right now. Mr. Srinivasaraghavan, and thanks so much for joining in today. And you know, the first question really on everyone's mind is on CV financing first of all. Is the revival in CV financing real, and is it sustainable? What are the key drivers that you're sensing on ground?
Okay. Real, I guess, is a dicey term, but the truth is, yeah, if you just looked at numbers, they are certainly up from where they were last year. But even here, if you looked at Q1 and Q2, sales were still struggling, but it seems to have gathered. I mean, towards the end of Q2, it started gathering momentum, and that momentum seems to be sustaining. However, one must keep in mind that if you look at the peak for commercial vehicles, it was 350. I'm talking about medium and heavies. In FY 2012, we hit 350,000 MNH CVs from where it plummeted thereafter. So we're still trying to get back to that 350,000 number. So it's actually something that's gone way down and climbed back up. However, with this, you also have to take into account that in terms of tonnage, there's been a massive increase. So growth percentages may not be as relevant here, because even with fewer number of trucks being sold, the total tonnage which is now coming into the market or has come
Seem to have snapped that line. We'll just get back to Mr. Srinivasaraghavan in just a bit. I guess what he's trying to say is that those green shoots are visible, but it's also a low base that you're working with. So you can't really say that demand is backed whole hog. This is just the first sign which is coming in.
What I was able to catch between the conversation was, he said, like, don't look at the number of trucks or the number of vehicles sold, because the number of vehicles sold in the last cycle were, let's say, X, and the tonnage was X into the number of vehicles. Now the capacity in the roads have become better, and the tonnage sold, I think, has become higher, which means the number of trucks sold on a number of vehicles sold would be still not a very impressive number, but the tonnage which is getting added up, I think, would be much higher. And that's a wonderful insight. I mean, if that is what he was trying to explain. You know, Sundaram Finance is one of those companies which is being very conservative in their lending, but in terms of process and the culture and the kind of mechanism they followed, I've heard some of the nicest things from some of the long-term investors of the stock. They said, look, this company's got gold standards both in terms of lending and in terms of risk management. Is the management back with us?
Yeah.
Okay. Hi sir, you were making a very interesting point, and that sort of got me thinking that don't look at the number of vehicles, but look at the total tonnage capacity which is getting added up. So can you throw more light on that how much of tonnage capacity has got added up, and what is the right way to really look at this data point?
Okay, I think in terms of the number, in terms of tonnage capacity, I think the right guys to talk to are the OEMs. I wouldn't be able to give you an accurate number on that, but anecdotally, I can certainly tell you that it's a very significant increase in capacity. Also, keep in mind that with checkposts going away or starting to go away, I think turnaround times for trucks have definitely dropped. Depending on who you talk to, they'll tell you there's either a 10% productivity improvement or a 20%, but that can vary. But capacity utilization too has got better, and I think it will get even better. So that too is something that's happening alongside. Now, some would argue that that's not great news for new truck sales, but I think that's neither here nor there, because over time that should balance out. But in terms of the tonnage, as I said, I don't have a number, but I know from what we are financing, the capacity, the tonnage capacity of the vehicles that we are financing today is quite dramatically different from what it was, say, even 3 years ago.
Your balance sheet change if you are financing a capacity which has got higher tonnage. I mean, your business would be dependent on the number of vehicles and the price of the vehicle.
Correct. Correct. It will be so in a very crude sense, if you like, if you finance one truck today, it will be the equivalent of, say, two trucks maybe 5 years ago. And this is not only because of price inflation, right?
Okay.
And if you go further back 10 years, one truck is equal to three trucks.
Okay.
Okay. Let's also try and understand what's going on with your business at Sundaram. And, you know, what every shareholder now wants to know is if value unlocking is on the cards with the demerger of your home finance, AMC and general insurance business.
Well, no, I think you sort of mix two things up. The demerger is of the non-financial services investments, or non-core as some people like to call it. That is what is being demerged now into a subsidiary, but ultimately, you know, it will become a listed entity called Sundaram Finance Holdings. So all the non-FS investments will move into the demerged entity. The investments in Sundaram Home Finance, in Royal Sundaram, in Sundaram Asset Management will all continue to sit on our balance sheet. So basically what we've said, and this is what we said when we went public with the demerger, it's to kind of ring fence all of the financial services investments within the Sundaram Finance balance sheet and move everything which is not financial services into the new entity. So that's what we're doing. Now, in terms of value unlocking, I think part of this demerger is also that because the feeling was that you had a bunch of manufacturing investments really sitting inside an NBFC balance sheet, and they were all carried obviously at historical cost. So nobody really knew what these entities are worth and what these investments really are. So we thought, to be fair to our shareholders and investors as well, there will be better value discovery when these entities move into a separate balance sheet, and then they will be looked at and evaluated for who they really are.
How do you think 2018 will be different from 2017? Because the macro in 2017 was strong and supportive. I mean, there was only one thing which was excess in the market, and that was liquidity. And that may not be the situation. Banks will get more powerful because their assets also will be taken care of because of recapitalization. So do you think the best of the run for NBFCs is behind us?
Well, I don't know about best and worst because to my mind, and if you don't mind my saying so, I think this NBFC run perhaps has been overhyped a little bit. But for people like us, traditional non-bank companies who sort of stayed narrowly focused on what they do, we didn't see any extraordinary boom. You know, we've been growing at a steady pace over the years, and that is continuing. So for some of the, non-traditional NBFCs, if you like, who've got into bank-like spaces, whether it's SME or, LAP and other things like that, for them maybe these highs of growth may start, tapering down, as you say, because, banks will now be a lot stronger. But for the, the traditional NBFCs which have concentrated on, say, vehicle financing, auto financing, whatever, I think it continues because we haven't seen any explosive growth this year or last year. It's been a very steady, measured growth, and I see that continuing into 2018 as well.
What is your take on what is going on with the lab book with NBFCs? I know you're conservative there, and I know your lending mechanism, so I don't have to worry about the lab culture which you have. But in general, are you worried about the aggressive lending which suddenly NBFCs are doing in order to gain market share? Because suddenly I get a sense that promoters, they understand what they want to raise capital, they're speaking the right things, and they are lending not because they want to lend, but they are lending because they want their books to grow.
That's right. I think for a variety of reasons, which I won't enumerate, I think a lot of companies feel the pressure for top line growth, and it looks like, one of the sort of easy areas to push top line growth is LAP. What I understand from, colleagues in the industry is LAP now means lots of things. A lot of what they call SME lending basically seems to be LAP. Right? So end use of funds which is a question that I think any lender in lending 101, one of the questions that you always ask is, what is the end use of this funds? I don't know if that question is being asked enough in LAP lending, right? Because as you say, there is this hunger to grow. There seems to be enough takers for this. So maybe people are running a little ahead of themselves, but I don't want to be judgmental or anything, but as an observer, this is the sense that one gets sometimes looking at the frenetic pace at which some people are growing.
I can go on and on with a lot of follow-up questions, but we are completely running out of time. It was an absolute pleasure to have you on the show, and I certainly hope to see much more of you going forward, sir.
Thank you.